Hi, friends. Professor Joe here. I hope you all are doing great. In this video, we are going to understand the journey of investment. How you can start your investment journey with just 500 rupees. And by the time you retire, you can have more than 2 crore rupees in your savings. So let us see how you can achieve this goal. There are few things you need to understand before you start your investment journey. So let us look at those one by one. You need to understand what is CAGR, that is compounded annual growth rate. The compounded annual growth rate of Sensex has been 15% year on year for the last 40 years. And same is the case with Nifty. The compounded annual growth rate for Nifty has been 15%. So now you can see that the index of our country has been growing at the rate of 15% in a long term. So that is what should be your goal, to make sure that your investments grow in a long term. Another important thing that one should understand is that never try to time the market. What is more important is that you spend time in the market. Because if you spend time in the market, you get the advantage of the bull run. Now, like you can see on the screen, there are some months where the markets are down, and immediately after that, there are some months where the market is up. So it is extremely difficult for anybody who is investing on a monthly basis to make sure that this month the market is going to go down or this month the market is going to go up. So it is very, very important that you consistently keep investing the money consistently. Another important point, a lot of people ask me that, sir, in investment, don't you think diversification is important? I say, yes, it is important. But just look at Nifty. There are 14 sectors in Nifty and there are 50 companies. So when you are investing in an index fund, such as Nifty, you are automatically diversifying your portfolio. Now, this does not mean that all your funds should be invested only in one type of investment. You have multiple types of investment. You can choose from those. This is one of the investment that you should focus on. So, say example, you have five types of investment. All the money that you have decided to invest, you want to divide it into 20%, 20%, 20%, 20%, and 20%. So, one of those 20% you invest into index fund. The balance you can invest into gold, real estate, mutual funds. There are many other options. So you can use any of those. Another important question that a lot of people ask me is, sir, if we invest directly into stocks, we can make more profit, like we have seen in the case of HDFC, L&T, Infosys, TCS. Huge profits. I say absolutely right. Like I told you, out of the 100% that you're investing, just invest 20% into this type of investment. Balance 80 is your choice. But at the same time, I always tell them that you need to remember some companies like BlackBerry, where it was and see where it is now. Nokia, look at where it was and look at where it is now. Kodak, look at where it was and where it is now. So the risk when you invest into individual companies is, what if that company does not do well, but the sector is still growing? Or what if that sector itself has a shift and a new sector start coming up? You never know what kind of changes can happen in the future. So it is always better to invest your fund into those type of opportunities where there is already a shuffling happening and the best companies are always there on top, and your investment goes into those good companies. Isn't that a great idea? Now, this calculation is basis that you are starting your investment journey. So you start with 500 rupees. For the first few years, you invest 500 rupees every month. Then you go to 1000 rupees for the next few years. Then you go to 2000 rupees for the next few years. Then you move to 3000 rupees for the next few years. Then you move to 4000 rupees for the next few years. Then you move to 5000 rupees for the next few years. Then you move to 100,000 rupees for the next few years. Then you move to 1,000,000 rupees for the next few years. Then you move to 1,000,000 rupees for the next few years. Then you move to 1,000,000 rupees for the next few years. Then you move to 1,000,000 rupees for the next few years. Then you move to 1,000,000 rupees for the next few years. Then you move to 1,000,000 rupees for the next few years. Then you move to 1,000,000 rupees for the next few years. Then you move to 1,000,000 rupees for the next few years. Then you move to 1,000,000 rupees for the next few years. Then you move to 1,000,000 rupees for the next few years. Then you move to 1,000,000 Like this, as per your earning capacity, you keep increasing your investment. So by the time you reach 30 years, you see in this system, you are investing almost 20,000 rupees per month. Now, I am a person with almost 30 years of work experience, and I think it is quite possible to invest 20,000 rupees every month into my retirement plan. And by the time you are 60, investing 30,000 rupees every month should not be a problem if you plan it properly. Now, just look at the returns. We are taking the same 15% CAGR return which Sensex and Nifty has been giving. You can see that we are well beyond 2 crores. In fact, we are just about 2.8 crores. This also gives you a margin of safety. Means if there is a bear run in the Sensex and Nifty, still it will make sure that you cross 2 crores. Isn't it great? You start with such a small amount, and as you proceed towards your retirement, you have such a strong savings to make sure that you have a very, very peaceful retired life. Now, remember, investment is a habit. Like every other habit, you have to start it slowly. That's why I say you start with 500 rupees. Say, example, you want to start exercising and making exercising your habit. The first day itself, you go to run, say, 10 kilometers. You might do it for 1 day, 2 day, and the next day, your legs will start paining and you'll say, no, I do not want to go. But on the other hand, you say that I will walk 1 kilometer today. Then I will walk another 1 kilometer. Then I will gradually increase it to 2 kilometers. This way, if you do, and you have a long term goal towards health, I assure you that your consistency will be much better. That's why I say you start with a small amount and have a long term goal to achieve your financial freedom. There's a very interesting discussion that was happening between Warren Buffett and Bill Gates. Bill Gates asked Warren Buffett, that Warren, your investment strategy is so simple, yet you are among the richest people in the world with just a CAGR of 20% per annum. How is it possible? Why aren't everybody else doing the same? So the answer that Warren gave was surprising. He said that people do not want to get rich slowly. Everybody is in a hurry to get rich. In fact, there was a report that said that in Google search, most of the people search is how to get rich quickly. You have to give your time and eventually you will become rich. Some people get rich faster, some take a little bit more time. I'm sure a lot of people will have this question in their mind that what if I did not start early? There is no problem if you have not started early. It's okay. I did not start my investment journey early. There are a few things that you have to do. The minute you watch this video, start your investment journey. That means start your investment journey now. Second, since you started your investment journey late, you need to have a future plan. Number one, start upskilling yourself in your area of expertise so that after retirement also there will be a source of income because you can become a consultant after you retire. Find out another ways of making income even after you retire, like get into teaching, affiliate marketing, or things like that. Find out ways online that you can earn money for the next 10 years after you retire. Now remember, after 60, when you retire, your body will not be that fit. So try to find ways that you can make income sitting at your house, doing online activities, taking online sessions, giving online consultancy. Find those ways out. 40 years of working will surely make you an expert in one area. Upskill yourself in that same area. Today, a lot of consultants makes lakhs of rupees just giving consultancy online. You can be one of them. I do plan to make a video on that too for people who have started their investment journey late. Now, if you subscribe to my channel, I assure you that this video will be coming up soon. And if you are subscribed, you will be the first person to be notified about that video too. So don't forget to subscribe this channel and of course like and share this video. Let's proceed further. So if you look at the summary of this video, we have tried to understand what is the returns that an index fund can give you. We have tried to understand how slowly starting your investment journey will help you build up a very big corpus by the time you retire. We have also tried to understand why it is important to invest month on month. We have tried to understand if you start your investment journey late, what are the few things that you can do? Now, friends, if you love the content that I'm creating, please like and share these videos. So, just like you, there are many other people who are confused or probably want to get rich fast. They will get a clear message that getting rich takes time, and it will surely help you and them to understand the investment journey of a person. And as I said, I keep creating videos on investing, trading, banking, investment banking, and personality development. Please subscribe to my channel so that you are notified first when I create or upload a new video. All I can say is keep learning, keep growing. Thank you. Namaskar.